Enjoy your meeting. Just a reminder, today's meeting is being recorded.
Hey everybody, this is David Blake, and this is Tuesday Tech Talk. And today we're going to quickly review the last couple of days in the market to kind of figure out what's going on. After that, we'll look at different areas of the market for support and resistance. And today we're also going to look at some stock ideas that may be in some of the stronger sectors that we talked about last week, what's leading the market higher in here. I'm going to try to keep my side down to about 20-25 minutes, and then we open it up to questions, individual stocks that you may have questions on or anything like that, or industry groups or something like that. But so don't waste your time going over all the different charts on the indexes last week. But we did have minimal gains for a fourth week in a row. On the Dow Jones, we had about 54 points. NASDAQ outperformed. It was up about 1.4%. A lot of that strength was on biotech and semi-stocks, so we're seeing a pretty good move over the last couple of weeks in that. We did see the CTI, our timing mechanism for the market, slide down 2 notches to a +3, and that actually is scheduled to go to a sell on the market, or a negative or neutral, at least in about 2 weeks, which means that the trades that we're talking about today could be more for shorter-term trades. So our momentum index fell about 5 points to a neutral +3 last week. Sentiment's still neutral at +1. We hit the target that we had earlier for the Dow of 18,620. The S&P is still a little bit shy. We got to 2175, so we got a little bit more upside on that. And the NASDAQ, we're looking for 5,200. Internal breadth remains strong, so I think we can still, the trend is higher. We can still work our way a little bit higher. Right today, we're having a little bit of a sell-off, mainly in the Dow. That's due to McDonald's coming up a little bit shy on comps. And also, you're having a battle here with this crude oil falling below $43, which I think is a little bit of a problem. If it falls below 42, 41 area, it could induce some more selling, especially in the oil-related stocks. So I want to keep an eye on that. Also, UUP, which is the ETF for the U.S. dollar, kind of keep an eye on that. We closed above the 200-day moving average on that last week, I think, Monday or Tuesday, and it's just sitting on that moving average right now. So if you'd see anything come out tomorrow from the FOMC meeting, the rate hike could be back on for September. You could get a little bit more volatility going in there. If that moves the dollar up, that could kind of maybe slow this advance down here for the summer rally. Okay, last week we talked quickly about what sectors were leading, where you might look to buy into this market. We talked about technology and healthcare and consumer discretionary as the three that I like the best. Under the consumer discretionary, I'm looking at discounters and also specialty retailers. As far as the utilities and the consumer staples, I would keep an eye on it to decide where I would want to sell. I would hold on at this point, especially if you get some dovish rhetoric tomorrow from Janet Yellen. That could keep a floor under those stocks. When she starts, rattling the sabers a little bit about higher rates again, that could induce some profit taking in the utilities and consumer staples, as people would, they're up about 20%, and they are overpriced historically as far as PE on those stocks. So we look at that. As far as the financials go, again, it depends on how the interest rate talk. I would buy oversold banks in here for the long term. I wouldn't aggressively be buying quite yet. As far as the materials, energy, and industrials, I'm still waiting to see on that. The oil falling below 42, 41 area is troublesome. And the industrials, again, if you start seeing a stronger dollar, you'll have a little bit of limited upside on those because of the currency trades coming back to the United States. Okay, the first one I want to look at today is some stocks in the technology sector and where you can find some ideas. Now, when I look at where I want to go into the market, one of the first things I do, I look at the sectors, rate them by relative strength, and then I'll go over to the industry group analysis under advanced tools. pointer here. If you go on that, you pick up all groups, then click on the relative strength. This is going to let you know what groups are outperforming the market. In this case, semiconductors and related are the top performing industry, and they're outperforming the S&P 500 by about 17%. Coal and steel are also good performers. Then you come down here to retail, apparel retailers, home construction, and we've been getting a lot of good news on home building and housing prices on that. And you come on down, you have food, pharmaceuticals, medical devices. Over here you got medical biotechs, medical supplies, building materials. And this is where I want to start to look for where I want to find stocks to go into at this stage. One other thing I will look at, I'll look at this 1 week percent change. And every once in a while you're going to see one of these things up 4, 5, 6, 7%. I may want to back off on that. But last week the best sector was retailers, apparel, automobile manufacturing. You had some good movement on GM and Ford. Semiconductors, again, was number 3 related last week also. Let's see what else we have in here. We have paper products, toys, restaurants, internet, food retailers, which we'll look at some stocks in that. And if you take these and you click on the industry group itself, it's going to give you a list of stocks that we can look at and how it's going to rate them strongest to weakest. And we've gone over this before, but I want to take a couple of these off and show you some of the process that you may want to look at when you go over these stocks, what we can actually look at. So if we look at the retail apparels, what's acting the best? Again, I like some of the discounters. Okay, we have Gap Inc., GPS is a symbol, Burlington Stores, Lululemon. Those are a couple of top performing retail stocks. So once we get a list of that, in this case, we'll take a look at Gap. We'll go over to the second opinion. You'll see that Gap was upgraded to a buy on the 18th at 23.26. Had a little bit of movement over yesterday. We're at 25.13 on that. You follow the stocks that buy, a little bit overbought, but when the market's trending, I don't care if it's overbought or not. That just means there's more strength in the move. You have some very good comments on this. All the indicators are bullish. So we're going to take a look quickly at the chart. Okay, you see Gap over here had a nice move back around March, and then rolled over. It's on a missed earnings, and now we're getting quite a move. Now, one of the things I want to look at over here, first off, I changed for shorter-term trades, I changed my moving averages to a 10, 21, and either 40 or 50. It depends on what you want to do on that. And on the bottom of the indicators, I look at a stochastic. I look at a 30-day stochastic. I look at the 14-day relative strength. I also look at the up-down slope. I want to see how much accumulation is going on in the stock. Okay, after this big move you've seen here on Gap, it came down here around 17, 18, and now we've covered 50% of this move down. And generally, when you see something like that, once a stock retraces 50% of a move up or down in a short period of time, it usually will outperform or retrace the whole move. So as far as I'm concerned, once you get through this 26 area, you should pretty rapidly get up on this gap up to around $30. The accumulation here, you see a big spike up. You were down here about 0.5. Now you're up here about 1.5, pushing on 2. So when you have a move like this, almost straight up, that's not just the retail client buying. That's institutions and mutual funds coming in also. So I like what I see. I think Gap could be one that you want to buy. I'll also sometimes go over here and look at the point and figure chart on Smart Chart. This shows me there's really not going to be any resistance on Gap to up to about 31. If it can crack through that, you can get a trade all the way back up into the 40s. But for a short-term trade, I might just look for something like that to go up. Today I see we're up another 78 cents. So we're up here pushing this on almost $27 or $26 over here. So again, Gap looks good to me. Off of that same list, we have Burlington Stores. Now this is one that okay, please add industry group, doesn't have a segment opinion screen. Okay, I will pretty soon here. Okay, here's one, Burlington Stores. Again, a discounter. I like the discounters. You're seeing some good accumulation. However, you've gone from about 52 to about 74, 75 in about less than a month. This one I may sit on the sidelines for. it's probably going to work its way higher, but I just think you've had too quick of a move on Burlington. Look over here, look at the second opinion. Everything's still bullish. It says it's still a strong buy. So I'll keep it on my watch list. If I could get a pullback, maybe down to the 10-day moving average or something like that, I would probably think about maybe buying in on that. Okay, here's Lululemon. It was the third stock on there. It was upgraded mid-June at around 70. We're up here at 77 right now. Everything still looks bullish on this. You're outperforming on the 50-day RS by about 20%. You're outperforming the S&P 500. Okay, we got a chart up here. We got a nice upward trending line going here. You got nice accumulation starting back here from the 1st of June. It's going at a nice 45-degree angle. This 30-day stochastic is up here above 80. To me, once this thing crosses 50 or 60, it's a nice buy for momentum trades. You have resistance here. You pulled back below almost to the 21-day. Lululemon's probably one in this area that I would look at. And you go ahead and you take a look at also on Lululemon, the point and figure chart. This is going back a couple of years. What this is going to show me is the next resistance on Lululemon. It's going to come in here right around 81, 82, where it made its highs back here in, I think, right around 2014, something like that. So not a lot of upside on Lululemon, but if I'm looking for a quick trade, this might be one that I could go for a pop as in the right industry. Okay, now we're going to look at some other ideas. This is the semiconductor group, semiconductor related. They've been on fire lately. That's why the NASDAQ's been outperforming. As you can see, the NASDAQ's up today. It was only off yesterday about 3 points when the Dow was off triple digits. And again, this will give you a list of power ratings on these things. This is from strongest to weakest. We'll look at a couple of these stocks. Ambarella, I think they have a lot to do with Apple stuff, but still it's outperforming as far as relative strength goes. This NVIDIA, Applied Optoelectrics, Applied Materials. Taking a look back here at Ambarella. Okay, you can see we upgraded it at 41 back in at the end of May. Pretty nice move so far. It ended at 57.39 yesterday. Go over to the chart. And this is another one that's had quite a fall from from about a year and a half ago. I think it was about 125, fell all the way down to in the 30s. But if you take that pullback, you can see this starting a pretty nice little round of base over here. Great accumulation. Not much movement up, but the accumulation has been great. Again, that's not just at retail doing that. That's institutions buying that. Relative strength looks good, and you're still up above this 80, which means the trend is still strong. You're going to have some resistance on this trade at around 64, 65. If it breaks through that, you can get a trade on Ambarella, and the symbol on this is AMBA, up to about $80. So that would be one that I would take a look at. Take a look at the point and figure chart on that. We don't have really any resistance in Ambarella until about 65. So that would be, at the high over here. So that's got plenty of up room. To me, it might be a little bit more risky than some of these other semiconductors, but high risk, high reward on that one. Okay, this is one NVIDIA, and if you look at, when you also look at some of these, you also want to check the news. And there's good news on this stock every day. I wish I had bought this at the $32 price range back in March, but we bought it back there. It's still long. You're at 55, so it's had a heck of a move. Everything is still strong down here. But if you go look at the chart on NVIDIA, you got a nice upward trend. It just keeps making higher highs, higher lows. Again, the up-down slope is pushing the all-time highs under strong accumulation, and you're all up here on the momentum. You're still up here over 80. I think this thing works its way higher. If you look at the, well, this is Cuervo. Let me go back. Okay, somebody just asked a question. When you recommend when a stock keeps hitting 52-week high over and over several days in a row, think Cisco. Yeah, that's what we're doing here is we're looking for when the market's trending like this. This is kind of what you call momentum investing, and we want to ride. We want to look for stocks that are making new highs, ideally, because those are the ones that are probably going to continue to make new highs, especially with the market being as strong as it is. So in this case, NVIDIA, again, it's making new highs. But while it's making new highs, you're seeing the accumulation go up. Now, when you start to see it making new highs and you start to see this UD slope going down, that's your first negative divergence where you start thinking about you start looking where you want to see an exit. When these things go, you want to, you have to move quickly on them. Okay, another semiconductor on the list, and one of the reasons why I chose NVIDIA and also this Qorvo, QRVO, is besides just the semiconductor list on the industry group, a lot of times if you're not a professional, you're one of the retail clients, when you go up to StockWatch and you go to the S&P 4 and 5 star stocks, go ahead and pull those things up and then list them by relative strength and find the top performers. That way you're buying in those groups. Fundamentally they're strong by S&P. You're not just buying a black box type of buy. You're getting stocks that are fundamentally sound, and that's going to be a good way to find these ideas. Now, NVIDIA was, I think, was the #1 rated 4-star stock on S&P Cap IQ. As Qorvo was #2 or 3. So again, we upgraded this one at 53 on mid-June. It's up to 60. Everything looks bullish. All the comments are bullish. Take a look at the chart. We're not at new highs here. We're almost at a 1-year high, but you're having kind of a nice little stair step up. You've got a trend line going up that's been tested several times. Nice accumulation all the way up on this move. Again, your 30-day stochastic shows strong momentum. Also, you're up above 80. You have resistance up in here. If we look at the point and figure chart, which we just broke out of a spread double top, okay, and you also broke out resistance here. This thing can make a run up to about $73. That's a nice trade from 60 to 70 plus. $10 trade on that Qorvo. That would be one what I would look at. It's got all the signs that it can work its way higher. Okay, from there, I want to take a look at some of the other industries real quickly, so don't have too much time. I mentioned the S&P Cap IQ stars list and how the stars are loaded for the subscribers already for you. And if you are a professional, you don't get that list. Just go in and you can get a copy of the stars and make your own list of those to try some momentum investing. Okay, one of the other industry groups on there and the market edge thing was the housing home construction industry. We've had about a month worth of improving housing numbers. They have a list of stocks on that you may want to look at. I like the stocks that came up that were both on the S&P Cap IQ star list and the market edge industry group. Stocks like Pulte Homes, PHM, has a nice looking chart. There's a smaller cap stock that's LGIH. Let's see, I forget the name of that, but KBH is another symbol. BZH. These are stocks that show up with nice charts on that. I think you can also one of the things that we looked at that I like for some ideas in the biotech area. Again, here's if you go to the 4 and 5 star S&P Cap IQ, these are going to be biotechs that probably have some earnings coming out. One of them they like near the top of the list is this Alkermes, ALKS. It's got a nice looking chart here. Again, walking up the trend line from this fall. It's almost up to the 50% retracement, so I think you can get a trade from about 50 to this 55 area. It breaks through that. You can go on up here and you've got several levels more that it can go up. Accumulation is good. The 30-day stochastic also looks fine on that. Here's one that came up on that list also. It's called Endo International. This has had quite a fall from about $85 down here to about $15. But look at the accumulation on this thing. Well, this thing's kind of trading in a sideways pattern. When you see this, the mutual funds are buying that. Now, this company, I believe it's ENDO, is the or ENDP is the symbol on this. I think they make generic drugs. It's just crossed above its 50-day moving average. The accumulation of this thing, what a spike in this thing. I don't know what it's doing today, but let's see. That's not doing much today. It's still sitting here around 17. But this will be when it's on my watch list, mainly because of this. As we start to see some momentum on this stock, you can see when the accumulation is on there and it's going sideways, you sometimes will get a big pop on these stocks. Okay, here's another one, Lannett Company. What a great looking chart. This thing had a big fall down. This is another maker of generic drugs. Over in here, they started buying it down here, and look at this accumulation over here. Again, very strong accumulation while it's just making a minimal move. It's up there around 30. I think you can see this thing up here with resistance is breaking up here around up around 36. So, that's almost a 20% move from 30 to this 36 range. So that would be one that I would look at in the, you're in the right sector, right industry group. Another group that I like in here is the consumer discretionary stocks, and we talked about some of the discounters being an area in that area in the specialty retailers that you want to get. Look at this chart here. This is a stock that I've followed for a while called Five Below, which seems to really be catching on fire. The accumulation is steadily moving up. We broke out, had a pullback here, I think, on some weaker earnings back here in May, but it's kind of it's been straight up since then. Relative strength is good, accumulation is good. Again, the discounters. This is kind of not an upscale Dollar Tree, but it is a discounter. Everything's $5 or below. Another one I like in here that we've talked about several times, specialty retailer, not a discounter, I don't think, but it's Alta Salon Cosmetics. It's a specialty retailer. Just keeps making new highs on that thing. It's had, every time they come out with earnings, it just keeps popping up. Again, look at the accumulation. Even though we're up in here at new highs, this accumulation, the UD slope just keeps going higher and higher. That means they're buying this thing. They think it's going to go a lot higher. And again, when you see the moves like that, that's mutual funds and institutions. Another one in this lot, here you have Big Lots, a discounter. It made a new 52-week high over here, kind of pulled back to the 50-day, which was good, and then it's taken off again as stair-stepping up the 10-day moving average on that. I like that. As long as these stocks are keeping above that, you watch that for a while, maybe give it a pullback to 21. If it breaks through that, that's when you want to, on these short-term trades, you want to think about cutting bait on that. But when they're walking up like that and they go walking into a new 52-week high, that's a time that you want to buy. Okay, we talked about the food groups were another good one. Okay, here's one called UNFI is the symbol on this, and this is called United Natural Foods. Had a nice little pop over here, and over here again we're buying. We're breaking out to a new high on this little run. But again, look at the UD slope. This thing is just constantly under a little bit of a bump right here. Now we're back under accumulation, heavy accumulation. And even the 30-day stochastic shows there's a lot of momentum in this stock. This UNFI's had a couple of good days. It's up another 61 cents today, so we're up here around 51 and change and that today. So, again, these are just a couple of ideas that I wanted to point out to you that we talked about, which sectors and industries are where you want to look at. And I wanted to just go over some of the charts that I look at, what I look at in some of the different charts, and where you can find the ideas to start looking. And lastly, over here on one of the slides before we go to the questions, what I also will do is in my stock watch list, I also make a list, and you can go on Yahoo or wherever, and make yourself up a list of all the top ETFs by sector and industry. In this case, I have about 66 of them. They go from miners to semiconductors, biotech, telecom, gas, utilities, retail, healthcare, the Russell, just about anything like this. And again, when you get to the relative strength, when you put them in there, click on what's going. When you see the market starting to trend hard like this, you want to be in the sectors, especially in this case, the ETFs that are making new highs and are outperforming. You have the global silver miners, the strongest sector right now. It's had a couple of rough days here. It's down about 8%. So in this case, you're kind of starting to look at, still strong if you look at the chart, but you start looking at that when you want to see how, where the 50-day and the 21-day moving average come in on that. But you also come down here, okay, SMH, the semiconductor holder, was up only 1.35% over the last 5 days. If one of these is up 10%, I'm probably going to not move into it. But this will offer you some of these, a chance to be in the strongest sectors and the strongest industries with less risk. In other words, if you buy some of these other high flyers and they stumble on their earnings, you can see them down 10, 15% on those days. But this way, you're buying a basket of stocks in the semiconductors, or if you're buying the steel, this SLX, you're buying a basket of stocks where like you'll have like Steel Dynamics, it'll have U.S. Steel, some of that. Where if you're in the wrong one, you're in the right group, but if you buy the wrong stock, you could lose 15, 20%. This will limit you on the downside. There you have the social media, SOCL, it's one of the stronger performers. You have that, of course, that's going to hold Facebook. It's going to hold Twitter. Twitter's gone from 13 to 18 recently. Facebook pushing new highs. So that allows you, again, to participate in the strongest stocks in the strongest sectors and limit your liability. Okay, how did I build this view? Okay, when you go up to Stock Watch, and I go up in here to Maintenance, and when I click on Maintenance, a drop down is going to come there, and it'll say Add List. Okay, it'll allow you to name the list. Once you name the list and go OK, that name of that list will show up here on your list status up here on your list of stocks on Stock Watch. Then after that, I highlight that. I go over here to Maintenance, and on a drop down, it'll say Add Stocks. Okay, I have my list of all the different ETFs that are in sectors and industries. I just go ahead and I add them. In this case, you can add about 200. Once you get to about 100, that's probably enough. That should give you enough sectors and industries to buy. And that'll give you an idea, so you're going to always be in the right sectors at the right time. So that's something you can do, and once you get in there, make your up and help manage account. If you want to get your list output, make sure you have the 50-day relative strength in there. So when you pull them up, click on relative strength, and then that'll show you which ETFs or stocks are leading the pack. And that's probably one of the easiest ways to participate in momentum investing. And again, you're working off your list of stocks. You'll always come up with some stocks you've never even heard of that are going to be leading the pack that you never looked at unless you find that. And that's kind of what I had today. We've got a couple questions in here I want to go over. So would you please add the industry group designation on the second opinion screen? We might be doing that. One of the reasons we don't do that is because we use our own industry group, and because of that, not every stock that we have is in an industry group currently. A lot of these will have the GICS code. If we add the GICS code, that'll put the industry group on the second opinion. But you're right. I wish we did do that currently, but we don't. Okay, what do you recommend when a stock keeps hitting new 52-week highs over several days in a row? Think Cisco. Okay, when you're trading these momentum stocks like that, you want to keep them up, following the 10-day moving average up, and you kind of watch it. If you're just trading it, you kind of watch that 21-day moving average. You want to see if it's going to break through that for your quick trade. Of course, first time you try that, it's going to immediately break through that and immediately go back up. But that's kind of your discipline on your fast trades like that. Okay, now did you say the stocks are listed in an industry group according to power rating? Yes, they are. And that allows you to get the strongest stocks in the strongest industry. Okay, we have time for a couple more questions. I've got my we're almost at 30 minutes right now. I didn't see any stocks come in on the doc questions, but generally, if you send in during the week some different stocks that you want me to look at, we'll go over the charts, we'll go over the point figures and that kind of thing, and see where we can find some buying ideas. Okay, I don't see any more questions coming in, but just real briefly, I think this pullback that we've had in the market the last 2 days, especially in the Dow, is healthy. If you've been reading the daily comment, I've been saying I think we need some consolidation, and that's exactly what we've gotten. And like yesterday and like today, dip buyers are coming in pretty quickly because they don't want to be sitting on the sidelines as this thing takes off. I think I don't have a new target for the Dow, but this 2,200 on the S&P 500 is in place. Tomorrow, don't forget you have the FOMC meeting. What you want to watch is just listen to see what Yellen says about interest rates, whether she thinks that September may come back on the table. I personally don't think that she's going to hit that very often, mainly because of the election coming up. I don't think they want to stir things up before an election. Okay, here's one question did come in. Qualcomm versus Intel. I'm going to back out of this and go into the charts. And I actually like both of those stocks very much. Okay. Let me put in Intel first. Okay, saw Intel over here. It fell down almost to the 21. Again, we're trying to trade these things especially in trading form right now, you want them above the 10-day. It did not quite get down to the 21-day moving average after it had a little miss on, I think, revenues came in a little bit shy, and now we're coming back up here. If Intel can get back above this 35, you're going to have a nice trade. A nice accumulation on this thing from all the way from back here in March. Mutual funds and guys have been buying this thing, and you've gone from what 0.5 to over 2. So they're buying this for the longer term, and I think Intel looks good. Qualcomm, as you know, broke out of the had a dynamite earnings, gapped up over here. Okay, again, what you want to see on this thing, the accumulation, nice accumulation coming up. Relative strength is overbought. But what I want to see with this thing is when you see a gap like this, the way you trade that is you want to watch this thing. If this thing starts to pull back, the low here was 59.13. Okay, if the thing comes below this and you get down to about 59, the way a lot of traders will trade that is they expect the gap to be filled, and if that happens, you could get a lot of shorting out right there down to about this area again to see if it fills the gap, and then it starts to move up. They cover that quickly and it can jump back up. But as long as this thing stays above this 59 area, Qualcomm looks good. I'll look at real quickly at the point and figure charts. Yeah, over here you're looking on this thing probably. You get your upside could be up to 67 or so on Qualcomm on the over the relatively short term. Today we're up 36 and 61 and change now. So the next box goes up at 62.01. That would again go higher on that. So I like both of those. I don't really have a favorite. They both look strong. You want to diversify your portfolio, you can. Actually, if you look at this 50% retracement, you've almost retraced this move here. This 50% of that, if it breaks through that, you could get another trade up here again to around 69 on Qualcomm. Let's see what we have. Any more questions coming in? Amgen versus Guild. Okay, I saw Guild was a little bit light last night. It was down about $3 or $4 today. So this one's down in here. You're not getting a lot of sponsorship on Guild at this point. See this down here? This is just kind of sideways. That's not the sign that I'm looking for. Amgen. Okay, you want to buy Amgen if you're looking at the two. If one or the other, you've got you're overbought on Amgen, which is in this kind of a market is fine. But look at the accumulation. You get a nice spike in that from about 0.77 to 1.3. So they're buying in this. You've just broken out of big resistance at this 165 area. I would expect to see Amgen, move significantly higher. Now we're at 167 today. So that looks higher. Do you get to go up this 180? Look at the resistance. You've banged it at 1, 2, 3, 4, 5, 6 times over the last year. You've got stopped out of this 166 level. So this thing can make a run up here to 180 on the Amgen. I'd have no problem with that at all. That looks, the more we've talked about this several times. The more a stock bangs into resistance, when it finally breaks through, it's better, especially when the accumulation thing is moving up. Okay, that's about it. That's about 35 minutes, so I'm going to go ahead and knock it off today. I appreciate you taking time to join us. I hope you got something out of it, especially where to look for trading ideas, especially when you have a market that has a lot of momentum behind it. That's when you want to move more into the momentum plays. Now, in a couple of weeks, when we roll over, we'll talk about the CTI again and whether we're going to go to a sell or whether we'll go neutral. That'll depend on the momentum and sentiment indexes that we also have in the market letter. We'll talk about that later. Thanks for joining me. We'll talk to you next week. And don't forget to pay attention tomorrow to the Janet Yellen's FOMC meeting.